FBN Capital's Purchasing Managers Index for August came in at a robust 55.2, which marks a 10% improvement from the previous month's 49.8 number and breaks from the last three successive declines seen since the maiden reading of 59.6 in April. The PMI shows the business expectations by tracking product output, employment, new orders, delivery times from suppliers and stock or purchases. To discuss the latest results, I'm now joined on the line from Abuja by Gregory Cranston, an economist with FBN Capital. Gregory, so this is the fifth reading, and it's interesting that we're seeing it bounce back after declining over 3 months. What's the big takeaway here? In your view, what is improving this reading right now?
Well, I just say first of all that we're doing our PMI and we're doing in isolation, so there's no other bits of the jigsaw, if you like. But my take is that last month, i.e. the August reading, there's a big improvement on output and very little movement on new orders. So my assumption from that is that this is an improvement in operating environment, because as we know, in Q2 there was pretty poor access to power. And, a good number of the companies who we survey depend on the grid for their power. So my assumption is that there's been improvement in the operating environment, yeah?
All right. I think a big interesting point there for me is that 22% of respondents reported an increase in their workforce. Do you get a sense that we're now seeing more inclusive growth in Nigeria?
Well, the sub-reading to the workforce was pretty flat in August. I mean, and if you go back in the 5 months we've been doing this, that actually has the 5 indicators. That's the one that's moved the least. So, which I take to mean that there's a certain reluctance across the sector to take new people, basically. Yeah?
All right.
But flat. I mean, not shedding labour, but not recruiting much extra either, appears to be the take.
Right. What's your take for the broad economy, though, looking at the rest of the second half of the year, moving into the fourth quarter? A lot of people thinking 7% growth is very likely this year. Do you get a sense that the growth trajectory is likely to pick up going into next year?
Well, for this year, we're expecting close to 7. Q2, of course, the Q2 figures, of course, out later this week. Now, our expectation is that it'll be a little change in Q1, which is 6.6. And the reason we say that is that although normally Q1 is the slowest, Q2, it's not hard to assume that there'll be another contraction in the oil side, due to the well-documented fall-off in oil production losses, let's call them. Yeah.
Right.
So Q2 6.6, but picking up slightly towards the end of the year to give a full year figure of coming up towards 7, I'd say. And looking to next year, looking to 2014, more or less the same level, maybe a tad less. So upper 6%, between 6.5 and 7.
All right. If we look at new orders is part of what you track here, and of course, part of these are export orders and of course, domestic orders. Do you get the sense that we're seeing a lot more exports outside the oil and gas space in Nigeria, or do you think it's still an oil story in terms of exports for Nigeria?
Yeah, well, that's a core question. I mean, the model we use doesn't distinguish between export orders and domestic orders. But one's impression is, well, look, non-oil exports are coming off a very low base. We all know that.
Right,
and
of course.
For many years, the figure in dollar terms was, 1 billion, less even. So there is some small pickup, some cement exports, a bit more on the agriculture side, perhaps also on some maybe small light industrial to the sub-region, but coming off a very low base. And
right.
The problem I'd stress is that Nigeria doesn't have access to a sort of, let's say, a smooth functioning, smooth operating regional organization. Right? If you take Kenya, I mean, the Kenya manufacturing sector has been able to some power ahead reasonably, because of the regional organization which works,
Right.
i.e. EAC, but it's
Right.
not quite the same there for us.
Right. So I guess some reorganization needed there to drive a lot more exports outside the oil sector in Nigeria. Let's leave it there. Thank you so much, Gregory Cranston, an economist with FBN Capital, talking us through their latest Purchasing Managers Index reading, which of course is showing an improvement in August. After the